Hello everyone, Hamel here. First, a quick disclaimer. Okay, going through the stocks that seem to be setting up for this coming week and may offer a low risk buy. Now, overall, I'm still I've been raising cash. I'm very careful about opening up new positions because I just don't see much upside. But that being said, if somebody's interested for a quicker trade, some of this may offer some of those opportunities. Plus, during my research, I went through several hundreds of charts, and all I can find is the defensive stocks, whether they are cyclicals, some chemicals, some REITs, some drug stocks, which pay higher dividends. So I don't know what that tells us about the market, but it looks like market is definitely, the growth stocks are definitely not working, or they are extended, because I couldn't find many of those during my research. So let's just go through the list. Now, Abbott I recommended last week, or actually highlighted it last week. It never did hit the buy limit, which was 109.62. So the same analysis applies. So 4% risk here, stop, buy stop, 4% risk. ADM, now this one broke out last week. So depending on how the market opens, one may still buy this. At a buy limit of 50.17, stop could be right underneath this low here. And then, you can probably see a few percentage points here. Again, the upside is not, I don't really think there is any benefit. There may be some upside, but I don't see this going 15-20% higher. I could be wrong, obviously. Market may prove me wrong, but that's what I see. AGNC, so this is a REIT, if somebody is interested in 9.25% dividend. So buy stop right there, and then stop loss here, and then it's a 5% risk. Amazon, so this one was also highlighted last week. So if somebody ended up buying this at 32.66, this one should find support soon here, right here somewhere. If it's going to continue its move higher, the stop should be at 31.6288. So 3.5% risk. Now, I don't have a position. I sold out here. So APH. So here, this one is pulling back to its 50. So this may have a longer time to go. However, if it breaks through 131.22, we may see higher prices there. Low risk opportunity, it may present here. So risk about 5%. Stop should be right there. Bristol Myers Squibb, again, another drug stock. We can look at J&J very quick. So it's breaking out. So it is very possible that money may start flowing into this large cap drug manufacturers and drug stocks. So one could buy this at 62.20, buy stop, stop at 59.42. So 5% risk there. Or one can wait here. But I think this should work looking at the weekly chart if it breaks through that level there. This is the chemical stock, CE. So again, a nice gentle pullback to 50-day moving average. So one can either have a buy limit at 129.49 or a buy stop at 133.38 with a stop there. So about 7% risk based on where somebody is interested in buying this, if they are. CTAS, again, squeezing right around 50-day moving average. I would only be interested if it breaks through 358.14 with a stop right there, 7% risk. This was covered last week, and this was the buy stop right there. So if somebody bought this, then I will definitely make sure that they have a stop at, they need to raise their stop at, let me see where the dollar value is here. Yeah, they need to raise the stop at 7.14. So to make sure that they are not turning this winning trade into a losing one. So right above that level that they bought. So break even pretty much. Now this can easily pull back and then go sideways and let the 50-day moving average catch up at somewhere here. So it may present a better setup down the road. That's just one of the paths it can travel. So again, the goal is not to have a losing position when this one went almost 20% higher. International Paper, again, defensive name, really tightening up here. So a good a buy that may work is 50.30, stop 47.56, a risk of 6. Now even these stocks are extended. So again, that's why I'm saying I just don't know how much upside do we have here. Meaning there may not be too much downside, but I'm not sure how much upside we have. So again, these are the patterns I normally look for. So I want to continue to do my research week in and week out, so we can get into rhythm. PNR, so this was highlighted last week. So if somebody bought at 53.28, it is just about getting ready to break out. And that's how it looks like. Looking at the hourly chart, we can see if it breaks through that level, it may go higher. I don't know how much higher. The stop should be right underneath this low, or it's only 4.7%, or somebody may come under here, which may increase the risk, but that may give it a better opportunity to work. There we go. PPG, another specialty chemicals. So a nice gentle pullback to 50-day moving average. One may buy if it makes a new high this week, or may wait till it breaks out 146.82, which may be a 5-point risk with a stop here. Rockwell Automation, this was also one of the ones I highlighted last week. So if somebody bought at 250.62, they're up just a little bit. So again, stop should be right here with the 3.5% risk. A REIT, 6.39% dividend. So if somebody did buy at 907, they are a little underwater here. However, nothing has changed in terms of analysis. As we can see, the three parts of the base. So this can continue to go sideways and then go to the right side and hopefully get some gains there. Personal services, symbol SCI, same thing, nice gentle pullback to 50-day moving average. One can buy this if it breaks above 49.59 on volume with a stop at 47.99 at 4-point risk. This one, so if somebody bought this, they should be out of this. So I had a couple buy points, so this one was never hit. Now this one was a pullback buy only if it found support. So technically nobody should have bought this, but if they did, the stop should have been here, so they should have been out with 7% loss. So now again, not every trade is going to work. So at this point, this needs to consolidate more, in my opinion, and the 10-week line needs to hold, which is the 50-day moving average. Terminix, again, a cyclical sector here. So again, very tight, very nice tightening action here, right above its 50-day moving average. So one may buy it at 51.99 with a stop 48.77, 7-point risk there. And last but not the least, Waste Management Incorporation. All of this, most of those have dividends. Again, nice gentle pullback here. Lower volume and the last tightening phase here. So it looks like it's almost getting ready to break out. Buy stop should be 118.93, and then the stop should be 113.78. So again, like I mentioned initially, I don't have any buy limits or buy stops in. I would see how market works, especially with the Georgia runoffs on Tuesday. We'll let us see how the new year starts with the first whole trading day tomorrow, and then Georgia runoffs. And I want to see what market does before I jump in, because I just reallocated money to cash in my 401k account. If you're following my other updates here, so we could easily see market go sideways and let 50-day moving average catch up, or this can hopefully go down here, gentle pullback to 50, and then it may offer us a better low risk buy in the markets overall, in the indexes if you're doing indexes, or in individual stocks. And I'm also working on generating a shopping watch list for high growth stocks. So I'm working on that. I'll probably highlight some of those as time permits. I hope everyone is doing well. Take care. Have a good night or a good day based on when you are viewing this. Take care.